Welcome back to the Switzer on Australia's Business Channel. My next guest is arguably Australia's most internationally respected local economist. He's been a recent member of the Reserve Bank of Australia and is a non-resident senior fellow at the Brookings Institute in the USA. And he also works at the ANU. So let's get his assessment on the Australian economy for 2014, China, and what he expects on the global front. Warwick McKibbin, thanks for joining us on the show.
Happy to be on the show, Peter.
Right, and so look, did you hear my editorial before we came on? And as an economist, did you laugh at some of my speculations?
Actually, I didn't hear your editorial before I came on, so I'm not in a position to comment.
Fantastic. Usually I do that and cop a gobful for my learned colleagues in the economics fraternity. Let's start with the inflation number today. Did it surprise you, Warwick?
It's surprising that it's happening so quickly, although you have to be very careful with a single number, and there are some special factors. But I think one of the most interesting parts is up until now, the non-traded inflation in Australia has been running well above what you would hope the Reserve Bank would be targeting. The traded inflation has been subtracting. It's been actually falling. International prices have been going down. In this numbers, international prices are rising. So we've got both traded and non-traded inflation now rising. And that's why the number was a lot bigger than people expected.
Yeah, and in a sense, if we wish for a lower dollar to help the economy get growth, we have to expect a bit of what you'd call traded inflation.
Well, you would, and it's both the dollar as well as falling prices overseas. I'm expecting prices overseas actually to start rising with the recovery in the US in particular. And so you get both a currency effect, if you believe the dollar's falling, and a price effect, and they can quickly turn around, and that's why the bank has been and should be keeping an eye on non-traded goods inflation, not just the aggregate.
Okay, so you threw that one in there. If you believe the dollar's going down, what do you think is going to happen to the dollar this year?
Well, I think it's very hard to call. I mean, I think most of the factors that people look at, like commodity prices, like interest differentials, those types of factors would give you a pretty clear forecast of a falling currency. But what I think you need to look at also is what's happening in the global economy. And there's a couple of big things going on. One is a rebalancing to the US, but also money moving out of countries that have been growing very strongly based on very loose monetary policy globally, particularly in emerging economies, Brazil, Indonesia. These economies will have capital flowing out, and it will flow into the US, but it'll also flow into other countries that have much better credit ratings than the US. And so from the portfolio point of view, you can make an argument that a lot of cash will come flowing towards Australia. Secondly, there are some big adjustments in government balance sheets around the world that need to be undertaken. If governments start saving to the extent that they need to, maybe not this year, but within a couple of years, that extra saving is going to flow to the global economy, and it will be coming to countries like Australia, Canada, etc., that have good economies, that have good prospects, that are growing. And so I think that portfolio shift from both of those factors could well and truly swamp the conventional calculations that people do. So I think it's highly uncertain, but I wouldn't be betting my house on the dollar being weaker in 2 years' time than it is today.
No, I know in my old teaching days at UNSW, whenever they put me on the spot to predict the Australian dollar, I always said there's going up or down or staying where it is. That's because if you look at the theory, often the real world stifles the theory when it comes to trying to tip where the Aussie dollar should go.
Well, you definitely would be wrong if you said it's staying where it is, because that's almost impossible, given the range of possible outcomes.
But 13 cents a year we range on nowadays, isn't it, Warwick?
Sorry, I missed that.
The Aussie dollar can go like a 13-cent range nowadays.
Oh, I mean, it doesn't take much if you look at the size of Australia and the size of the supply of Australian dollars for a small shift in a global large player in the preferences of a lot of big spenders to move the currency a long way in either direction. Okay,
now the Reserve Bank and Treasury have kind of thrown out a 2.5% growth figure for 2014. I think it's a little bit pessimistic, and I did predicate on the belief that the Aussie might go to 85 or even lower, and that will help the Aussie economy grow. What are your predictions for growth in the Australian economy over 2014?
Well, actually, I don't do forecasts. Most of what I do are the big picture issues on scenario analysis. That is, what happens if certain things happen in the global economy? How much will things change? I think it's very difficult to do these very short-term forecasts that you're talking about.
Yeah.
There are some strengths for the Australian economy, and there are a number of serious weaknesses. The big problem facing Treasury and the bank, of course, is this balance between how much of the economy needs to be dealt with from a demand management point of view versus how much of what we're going to see is going to be because of structural adjustment. I think the biggest problem in Australia is the need for structural adjustment, and I think that comes back to other policies apart from what the interest rate setting might be.
Okay, so for my viewers who are normal people out there, Warwick, explain what you mean by structural adjustment, because it is a critically important thing for the Aussie economy.
Well, given Australia is part of the global economy, things that change overseas can have a big impact on Australia, and one of the biggest trends for the last 15 years has been the very large number of very low-skilled workers that are entering global production through the growth of China, through the opening up of India. And on the other side, the number of middle income, or the growth in the middle income classes in these economies. So on the supply side, there's a shift in the price of labour in these economies, and that will show up in the shift in the relative prices of goods. So manufactured goods will become a lot cheaper relative to services. And if we're in the world markets, that means our economy will be affected by the shift in relative prices as well. This is why you're seeing the auto industry under such stress, and you're seeing other sectors of the Australian economy not being competitive because we cannot compete with the low-skilled labour in other economies. So on the supply side, there are those problems. On the demand side, as people become wealthier in these emerging economies, they're buying different types of goods. And if we're selling certain types of products to middle to high income people that we're very good at, like tourism, like education, then the demand for those will go up and the price of those things will go up. And so you see it in terms of a multi-speed economy when you look domestically, but actually globally many countries are going through the same sorts of issues because the whole world is now linked. And I think this structural story where you need to move out of some industries and into other industries is accelerating, and that's really the issue that Australia should have been dealing with for the last 10 years and which we haven't really faced up to, because we've been focused on China and the income effects of China, not the changes in the structure that we have to undertake to remain competitive once China reaches a certain level of income.
Okay, so are you saying then, in a sense, one of the big challenges for Joe Hockey as our Treasurer is to focus on some of the big issues that obviously Paul Keating focused on when he was Treasurer with microeconomic reform and things like that. And I'll give you a classic example. Last night, Jerry Harvey on Sky News was talking about he owns a resort in Byron Bay, and on a Sunday night he has to pay $48 for someone to wash dishes. Now, that is great if you're the family member, or your family member is getting $48 to wash dishes, but can Australia maintain some of the wage structures that have developed in a former era when there are challenges coming from overseas, which you pointed out?
No, that's exactly right, Peter. It's not just in the labour market. It's to do with the cost of doing business, the regulatory costs, how much you have to waste to get changes made in your company. It's the cost of capital, it's the cost of energy, the fact that Australia's energy prices are rising far more quickly than our competitors. There's a whole range of areas on the cost side of the economy. Now, if you think of costs, you can also think of productivity. If you can raise productivity of a worker, that is, they can produce more with the same effort, that's like reducing costs. And so it's really the supply side of the economy, I think, where we need to focus reforms. And it's not just changing taxes, well, that's very important. It's also changing incentives and changing the regulatory burden, changing the role of government in the production side of this economy. Joe Hockey has a very hard job because he is picking up the position of Treasurer at a time when it has been badly managed for at least 6 to 7 years. And so he's starting well back at a time when Australia's major export destination, that is China, is slowing and commodity prices are falling because of additional supply coming onto the world market. So we don't have the income generated from the boom that we had 5 years ago. We should have been forward-looking. We should have been Norway in the way that they deal with the oil resources which they have saved and which they're using to build their economy. We didn't do that. We basically, both publicly and privately, just spent this benefit, and now we're going back to having to deal with the structural problems that have always been there, but now we have to find some other way to pay for fixing them.
So in a sense, bringing up words like work choices, I know it's got bad political connotations, but the bottom line was with work choices is if you're going to get pay rises, it's got to be linked to productivity, and there was enormous backlash. Would you love to see Joe Hockey introduce maybe a different word, but achieve that kind of thing through his negotiations over the next 2 or 3 years, that the labour force of Australia becomes more productive and therefore can be rewarded more?
Well, I think you need a system where people are rewarded for their effort, and where effort is actually measured by the returns to their work. But you also need a system where there is a degree of fairness, and so you have to balance this fairness. Now, maybe the fairness shouldn't be in the wage-setting process. Maybe it should be in the tax system, which we currently redistribute income to low-income workers. To try and achieve a fair outcome and sacrifice efficiency is a very dangerous trade-off, because you can get yourself stuck where we are. So I think we have to rethink not just the labour market institutions and the structures that we have around that. We also have to rethink the idea that in some sectors that are booming, wages should go up, and in other sectors that are contracting, wages should go down. And that message, that signal, is the way in which you get workers to move across industries. Now, it's not simple, because then you have to deal with retraining and relocation and a whole range of adjustment issues. But I think that's where, if you're going to have a flexible economy, you have to focus your policy development.
Okay. Just quickly on China, do you think we have anything to worry about China's growth for this year?
Probably not for this year, although there are some debt issues in China. Government debt is not as high as it is in Europe, but around 70–80% debt to GDP ratio. But the amount of lending in the banking system and in the shadow banking system, that is not the major banks but outside the major banks, is worryingly high, and it's not clear that that lending has actually been very productive. So there are some concerns on the debt side in the Chinese economy, but I'm pretty confident that in the longer term China has enormous potential to grow. It's 15% of US incomes per capita. If they catch up to the US, that's a massively different world, where Chinese are very wealthy individuals. And I think that's where we're heading, and that's where we have to focus our economic efforts, even if there is a temporary downturn in the Chinese economy.
Warwick, one last question. Horror budgets have been mentioned, that the Treasury will be possibly introducing one this year. My concern is the economy is not strong enough for a horror budget, and I'd rather see him outline some plans for the next few years and maybe introduce a horror budget in 2015 when the economy is stronger. What's your view?
Well, my view is that you need a very clear plan of where you're heading. So the first thing should be at least a 10-year horizon about this is where we're going and this is how we're going to get there. You don't have to do it all in the first year, but you have to have a very clear strategy of when you're going to do it and how you're going to do it. Secondly, although getting the debt down is important, the composition of spending and the composition of taxes are also important. So the review committee should be looking very carefully at what we spend on and how we tax, because I think there are a lot of gains to be made for the economy without even changing the level of debt through the aggregate budget position.
Okay. Warwick McKibbin, thanks for joining us on the program. It's a pleasure having you, mate.
My pleasure, and I'm sorry it's taken me so long to get here, Peter.
As long as you keep on coming back, mate, with your views. Thanks very much.
Thanks.
Time for another short break, but when we return, the Managing Director of AFIC will tell us where the company is heading and how we should be investing in 2014.